Good morning, traders and investors. Steve Gans here, and welcome to the weekend update for February 2nd, 2025. Now, anything I'm going to cover today, there's a big question mark on, given all of the tariff battles that are currently being waged here over the weekend. I think those will certainly have some negative impact on the markets, largely because tariffs are likely going to increase the cost of doing business for many businesses and consumers as well. Cost of consumer goods that we routinely buy, where items are brought in from other countries, those prices could potentially go up by that 25%. So we don't really know how that's all going to play out right now. So it's going to be kind of a wait and see. I'm going to analyze our markets based on what we know right now, based on what the chart patterns look like right now. But that could change dramatically here Monday, Tuesday, etc., as we go further in the week. We're holding up really well during earnings season. A lot of earnings have come out. Earnings have gone fairly well in most cases. So we're not seeing any real negative impact from an earnings standpoint. Now, let me get my pencil out here and draw some chart lines. So if we look at the SPX, we can see here that we pretty much came back and we hit the highs that we had here a week or so ago. We've now come up to those highs. We've bounced off them twice. We bounced off here, went lower, bounced off here, went lower. That said, the good news is we had been in a bit of a downtrending channel here, and we broke that a week or so ago. That's all good news. That's bullish in nature. The other thing is that our up days, at least so far, have been on higher volume. That also tends to be a little bit of a bullish signal. But we can see on Friday, we were looking really strong on Friday. Then when the tariff news came out, markets started selling off, and it sold off with a little more volume than I would like to see. If this continues on Monday, which I think it might, we're looking at having bars that may very well come down to this support line right here over the next couple of days, and then we'll have to see if that holds or not. We're going to have to see what kind of volume is associated with that. If that volume picks up considerably too, if we just come to the bottom of the channel to this prior support line, right there's a pretty good support area in that 5,900 range. If we drop down through that and through this line here, we're looking at a fairly significant potential decline at that point from my perspective. All of this, of course, can change on a dime. Let's say that the tariff news goes in place. Companies determine that they're going to be impacted negatively, and they start reporting that. Therefore, companies are going to be less profitable. People are likely to start selling out of their stock, which is going to drive this down. And let's say we do break down here somehow, and then all of a sudden, President Trump decides, ooh, this is hurting the market more than I'd like, or some agreement gets reached and the tariff situation gets back down on both sides. That could instantly rocket us back up. Bottom line is we're in for a volatile couple of weeks, most likely. Now, as we look at volatility, let's come in and take a look at the VIX, the volatility index, because that's another reading, if you will, that kind of helps us understand what's happening in the markets. Right now, volatility, while it spiked up a little bit on Friday, still pretty darn low. So that's a good thing from a standpoint of not a lot of fear came into the market on Friday. There weren't lots of people out there buying insurance on their portfolios. So we're going to have to see what happens with this on Monday. My expectation is as this rhetoric ramps up on both sides of the equation, volatility is likely to spike up a bit here. So need to be watching for that. That volatility spikes up, that thing gets up into here somewhere, then we're likely to get more of a sell-off happening. So let's take a look also at RUT. So of course, the Russell 2000 index, that tends to consist a little more of small cap companies, banks, a lot of banks make up the RUT, etc. I think they're less likely to be impacted by all of this, all of the issues that are going to go on with tariffs. So I don't know. It'll be interesting to see how Russell holds up. My expectation is that Russell might come off a little bit with the rest of the market, but I just don't think that the Russell is going to be impacted as much as the S&P 500 is likely to be impacted. Again, because the Russell is smaller cap companies, many of those smaller cap companies only have exposure here within the US. Of course, a contingent of them rely on parts maybe from outside the US, etc., so they could have some impact. But a lot of these are banks, financial institutions, things along those lines, and I don't know that the tariffs will have a major impact on those entities' P&Ls at the end of the day. And if their P&L isn't negatively impacted, their stock price probably won't be negatively impacted either. So it's going to be interesting to see how the Russell does hold up here. And I also want to take a look at the volatility of the Russell, the RVX, and see what that's looking like. Similar story here. There was a little bit of a bump in volatility, but again, not real huge at this point. So it's going to be, again, interesting to watch this develop over the week. I urge everybody to pay close attention to the volatility index of the Russell, of the S&P 500, and of course, pay attention to those indexes and see how those two kind of play back and forth over the week as well. My expectation is we're going to see higher volatility in the S&P 500. We're probably going to see a little more sell-off in the S&P 500 percentage-wise than what we're likely to see in the Russell. And we'll see if that bears out. We'll have to pay attention to that. So I'd like to ask a quick favor of everyone at this point. If you find this content to be of interest, of value, please like, subscribe. Feel free to give me any comments down below as well. If there's certain things that you might like to see answered, put them in there. If I can do, I'll make sure that I do that in the future. I do look at all of those comments, and I very much appreciate feedback. So that's going to wrap up the market review at this point. Now, for those of you that are part of the alert service, let's get into the positions that are currently open within the alert service. And if you're not in the alert service and you have an interest in knowing more about it, I'll put a link down below for that as well. The alert service is basically where I share my trades as I make them. I do a little video explaining what trade I'm putting on, why I'm putting it on. More often than not, these are options trades. That tends to be what I focus on here, helping people navigate and learn the options world a little bit. So these are the trades that are currently open within the alert service. I did close out an earnings trade this last week that went very hard against me in NOW, N-O-W, and that was at a loss. That ended up at about a $330 loss. So that was, I'm not a fan of doing earnings trades in most cases, particularly not ones that I share in the alert service, because they often require very quick and focused attention the day after their earnings are announced, or when the market opens after their earnings are announced. Some, of course, announce earnings in the morning and then the market opens. But regardless, you need to be there. You need to be paying attention. You need to be able to move quickly, often quicker than what I can relay in an alert service, because the markets will move so fast on the mornings of those after those announcements. And that's what happened here. It was moving fast. There were some things that I did in that trade that did help mitigate my losses. Those of you in the alert service, I did a detailed video under the Now circle. Will show you how I reduced the loss in that trade as I exited it. But it's not easy to do, and that's why I tell people up front when I put on earnings trades, be careful with these, keep them small, and know that you're going to have to possibly manage them if that trade goes against you. Anyhow, out of that one for a small loss. This butterfly trade, or started as a butterfly trade, this thing's moving along just fine. We're just waiting for more and more decay to creep in here. I'm expecting that I may end up pulling this trade off during the week this week for in the 10-12% profit margin, somewhere along those lines. If we get a hard sell-off, this trade is going to take some pressure. It's going to depend on how hard that sell-off is and how long it lasts. So I'm going to be paying close attention to that one. This trade, we can see our T0 line here is much, much flatter in this one. So a sell-off of 100 points or so in this one is not really going to have much of an impact. And that is what I love about these butterfly trades. The market can move up and down 100 points, 150 points, and it doesn't impact these butterflies much at all. That's why this tends to be my favorite trade for generating income. And again, that's part of the alert service. I also offer a deep dive class on butterfly trading. I'll also put that link down below as well, which is about 10 hours that tells you when to put them on, how to put them on, best scenarios for putting them on, how to manage them in up markets, down markets, etc. This trade is a flat butterfly. It was put on for a very specific reason at the highs of the market when we hit some resistance. I will tell you that right now this is showing a $350 loss. That is not accurate. This trade is about break even. It may be down a few bucks, maybe up a few bucks. It's just showing that right now because the bid-ask spreads are wide, particularly after market and particularly when we're looking out in April. That's just a ways away. So this trade's actually much better than what it's showing right here. It's just picking up the closed market data where the bid-ask spreads are much wider. The next trade is, this particular trade is a leap where I bought a long call in a stock that I felt had a strong potential of going up over the next year and a half or so. In this circle, when I announced that I was buying the long calls on this, again, gave a detailed explanation of all my reasons why I was doing what I was doing in this. And so that trades up moderately nice at 448. And then I have the wheel strategy. So this trade, similar process. I analyzed it. I decided that I want to own a long-term position in FTNT, but I decided that I wanted to enter that position by selling puts and waiting for the stock to get put to me. So I have now sold puts in this thing 6, maybe 7 times. I keep rolling them out a month, rolling them out a month, rolling them out a month. And this is now up $3,300. And by the time this fully decays here over the next 19 days, this trade is going to be up just shy of $4,000, assuming that it doesn't sell off and I get a sign. And I've never taken a share of stock. So I'm selling 2 puts in this case. So let's say that my P&L, that this does sell off. At that point, I will have $4,000 in profit, which means that I would be way ahead of the game if I got assigned this at, I believe this is $90. If I got assigned that at $90, my cost basis would actually be $70. All of that is explained, a detailed analysis on the wheel process, which is in that circle for people that are interested in it. And I'm doing all that math off the top of my head. I'm not certain that was 100% correct, but conceptually it's right. I'm selling puts in something. I'm taking in premium along the way. That premium is reducing my cost basis for the day when it does eventually get assigned to me. My cost basis will be significantly lower at that point. That wraps up the analysis of our current positions. I may, if we do get this volatility event, if the market does sell off pretty considerably here, I will say that coming back here to the SPX chart, if SPX sells off like I think it might down into this area and our volatility spikes up, I may be looking to enter another broken wing butterfly. That's one of the scenarios that you can get into a butterfly with a much better reward to risk ratio than you might normally get on a typical day when the market isn't selling off, when volatility isn't up. So just know that if that happens here over the next few days or sometime this week, if we get down into this general range, I will be taking at least a look at modeling out a new potential trade. And of course, I will share that out through the community when I do, along with a full explanation of why I did what I did, how I plan to adjust it, etc. So with that, I'm going to wrap things up here. So thank you everyone again for checking out the weekend update. Please do subscribe, give me any comments. And again, if you're interested in the alert service or the community, that link will be down below. If you're interested in knowing more about butterflies and how they can be a great trade for generating income, and they're one of the most forgiving trades out there as far as big moves in the market, check out the Deep Dive Butterfly course as well. That's it for now. Take care.